The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 11 o'clock till noon. I did help out. Tom was away, so I was working with Tommy just now. I was the co-host of the Money Masters show. It was really, I went by. It just went by in a flash of a second. It was amazing. We did a lot of discussion. We discussed the volatility index, the market itself, what's working, what's not. We'll do that right now. So the Dow's down 137 at 19,833. The S&P is down 9 at 2271. The composite index is down 23 at 5,589. The volatility index is up 0.78 at 1266. Yesterday, it had a much greater move that held, and that essentially said that the rally that we saw from the low, from about 200 points down in the Dow to closing down, what was 120 or something, yep, that was good. Now, that might have used up the Chapwave trend gauge that flashed yesterday, suggesting that there should be a 9 to 11 point rally in the futures within 2 days that will impact the market cash indexes like the Dow and the S&P positively. Might have been used up yesterday because we had a 14-point rally from the 2263 low to that mid-afternoon high around about the 2278 area. Now we're back, and we've just been testing the 2263.25 low. The low so far this morning has been in the E-mini 2264. Just missed it, 75 cents. And now is a very important period because the stochastic is way higher than it was at that level yesterday, at the same price level in the Chapman 5 to the downside. The MACD is flattening out, and the histogram's been improving a little bit. So in the next 2 hours, let's see, 11 o'clock, no, it must be more than that, 1:30. By 1:30 to quarter to 2, if the E-mini, which is down 10, is not down -6 or less, then there's a problem. Then we've got 2 triple-digit down days concurrently, 2 days in a row. That's really not the issue. The issue is this doji candle that was made at 22.99.50 on the 26th, and the straight down move we've had, it's given back. Actually, you can see it in the Dow a lot better. So let's go to that. The Dow Industrial Index made an E/B. Everything about it says that right now I really must think of it as a peak E, like almost a right arm extension failure pattern. And that means peak C is going to be the key right here in the weekly chart. Monthly is a peak D in the 120-minute chart right there. So there's a lot to suggest that on a short-term basis, we've made a top that is near-term, that could turn into a short-term top, that could go short-term to even intermediate-term if there's overbought, if this is more like a sell the news, buy the rumor type thing where finally you've got a president to meet the prerequisites of the statements that he made in the election, and that's why he was voted in. It's going to take more than signing and statements. You've got to see how these things come out. Now, my longer-term view on the Dow and the S&P and the QQQs is that we're going to make higher highs in 2017, but this is a leg D in the monthly chart of the Dow. With a potential doji here, I would not be surprised if this becomes at least a top for January into February. We'll be looking at this real closely. Not a big deal to go from 19,833 to 20,126, which was the high of the 26. All right. The other thing is that we could be forming, using time, you could form a right shoulder here that goes chop, chop, chop between 20,000 and 19,700, 19,650s. Just chop, chop, chop. for about 3-4 weeks. And that will be the right side of the shoulder. And then we're going to see what happens. In the meantime, back at the ranch, make it real easy. A close below 19,650, very, very negative, and a push towards the 20,000, let's call it 19,990s, would ameliorate some of the selling and be a positive. Let's look at the S&P, SPX.X. There we go. S&P peak G/C. It looks really like a G at this particular point. Peak C in the weekly if it doesn't make a new high this week. What I am looking at is in the monthly chart of the S&P, it is leg C. The question here is, Basil, your wave E on weekly industrials could be wave A on recycle, which makes you wave C, wave D. Gator, I'm going to have a look because you are the one that has studied this very intently. A, B, C, D. You mean A, B, C, D, E. Okay, if that becomes kind of an instant restart over there on the 12th, that was December of 2013, maybe. I'm going to say it'll be very strict. Everything made a low in August to October, August to February, over that period of 2015 to 16. So I'm just going to say at this point, I still think it's a D. I'm suspecting that we're going to go to an E and an F. And at that F, we're going to be looking to see, is this a major, major top? We did not go to trough D, only A and C. Okay, you know what? Gator, you and I, let's confer with this because I want to go through what you're thinking. I think we did that once before, but I'll do it again because it's really important. In the meantime, I am going to call this leg D for the moment in the Dow. It also corresponds, look, the NYA, New York Stock Exchange, NYA.X, NYA.X. Type it incorrectly. There we go. Yeah, this is, I don't know what to call the, this is the one that's confusing to me, the NYA, the New York Stock Exchange. Everything else is not confusing. It's an A, B, C, D. Oh, it's a DB. Okay, here we go. So there's that alternate count, and that gives it a D to a B. In the daily chart of the New York Stock Exchange, I'm thinking it's a D. I think that is some kind of a top. And this is an F/C in the weekly chart. Only a leg C in the monthly. You see how the monthlies are all lining up? I love when they all line up. So I'm going to kind of stick with that for now. And the IWM, which is the Russell 2000, peak C1, C2, C3, C4. This is not good. If the IWM at 134.31 up 2 cents, that's good. I'm watching it closely. I want to see if the Russell, sometimes in the beginning of the year, you get the other indices falling and the Russell holds better. We're going to be watching that closely. Meantime, a close below 132.70 on the IWM would be very negative, and it's not there right now. Gold is up. It was up 20 before. Now it's up 19.20. Really strong move. Now, what's really interesting about this is that if you look at the GLD, same thing. It's closer to getting to a higher high. But if you look at the if you look at silver, we were just doing that earlier on. Silver's kind of broken out here. It's up 0.33 at 17.48. Basil Chapman, we'll be right back. Dow's down 133. Fascinating market as always. We'll be right back after these important messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Just wanted to show this. This is down 9.50. This is the E-mini 10-minute chart, made an arch formation and second arch formation. And the low that was made at 2263.25 by 11 o'clock this time yesterday. It held above that. That's really important. So watch out. 2271 is needed to break to the upside, and 2262 takes out the lows. And I want to just show silver chart acting really well. The 200-period moving average has become a magnet for it, and that says that it should, that's the daily chart, it should hold 17.12 to $17 and try to push into the 1760s. That's important. And now we're going to go to Gator in North Carolina. Hi, Gator. How are you?
Hey, good morning, Basil. How are you?
I'm well, thank you.
I was just looking at the INDU chart. I'm thinking that it's possible we may have topped out on this based on if you relabel the weekly the way I typed in the den. You went to D on the monthly, that would be D on the weekly, E on the daily, and you already did a D, and we're pulling back on the 120-minute chart. It looks like a top could be in here.
Oh, my. Let me just have a look. Where did you post that in the den?
No, I can do it right now.
Okay, post it in the den, and I'll have a look at it because I'll just transfer it so that we can see it live. I'm looking at this. So that's A, B, C, D, E, A, B, C. Huh. All right, I'll have to look at yours. Let's go through. There we go. So it's this one here, pulling it across. It's the one on the right. Oh, there it is. So wait a minute, but why you got D to an A over there?
Right, I recycled it.
Oh, yeah, but you can't take out, you can't come back down. Everything about it. You see, look, let me show you what, when you go from the D to the E/A, it becomes an E when you take out, first of all, you took out that low right there. Oh, it's not you, it's yours. I'm waiting for it to pop up with it. You took out that low right there. And then what happens is you went all the way back down with the MACD and stochastic. So everything here, everything matched an E. This all matches the start of a brand new move to the upside.
Well, I'm just saying as an alternative count on when we did the pullback in, back there.
Going into the October,
we
right?
didn't have the E. We went trop A, B, C, but we didn't do a D.
Right.
So I'm thinking
I see what you mean. Okay, no. Let me just do this. This is a really good question. Maybe someone else is going through the same thing as well. There it is. There's the D. There's the E. Two doji candles. If I do a vertical line, you'll see the stochastics just turning down. The MACD was still good. Then the MACD held, and then it broke down. But if you put the down arrow coinciding with the MACD going negative, the stochastic negative, and the closes below the 9-period moving average, all of that fits to have a down arrow. That's number one. Number two is when that A takes out that low of the 5th, the week of the 5th of August of 18,247, if it does it a second time, that to me always says, no, that's an E. There cannot be a recycle. The recycle to the upside couldn't happen until you complete your E and you got to get a buy mode. So that's exactly what we got with the stochastic and the MACD. Everything here fits perfectly for a C at this point. But that doesn't mean to say we could even pull back to 19,000. We could pull back as long as we don't take out 17,883. This could still be a C, and we could chop, and eventually make a D.
Right. I'm just saying that if we, I was actually looking at it as opposed to the 4 time periods. 3 of them went to D's or better.
Okay.
So it's sort of like fitting the. So I'm saying if we did do a top, how can you justify that by not going to a D? So it's sort of like bending the rules a little bit, and plus the fact that since when we had the pullback starting in August, we didn't do a complete D, which a lot of times in the charts that I've noticed is that when you only go to a C, that's just really a pullback in a continuing, move up. In other words, just like a correction.
Yes.
It's not a change of trend. So if then by working it backwards, that gives me a D at the top, which matches with the D in the monthly, the E in the daily, and the D in the 120 minutes. So to me, it looks like we could have put a top in, and the other way to trying to make a D work within that, because we have 3 out of the 4,
is to recycle,
do the recycle. It's the other way you can come up with a D, because if we do get a big correction here based on the other charts, now, the monthly we can go up and make a higher high, but if we don't, then that has to be a D.
But Gator, look at this. We've got the the S&P in leg C, probably going to make a peak C this week. You've got the QQQ series in C. I don't mind. To me, this fits perfectly to say we're going to have a pullback, maybe more time than price. It might be both. I don't know yet, but that still leaves us room to go to a D. Now, the longer we take to get to the D in the weekly chart, the greater the chance that there's not just a D, but it goes to a D, maybe even an E and even an F before it pulls back. So I'm watching all of this very closely. And if you look at the Qs, the index 100 trading vehicle, look how quickly you went to peak. B, C, D, E, F. I think this is an example. I better write it down now because I had already forgotten about it. Qs weekly, A to F. I hope I can read that now. That is I've never seen this before in a weekly chart to go B, 1 week down, C, 1 week down, D, 2 weeks down, but just barely 2 weeks down. E comes in 3 weeks later, F 1 week down, and then boom, a very sharp pullback. I've never seen that. B, C, D, E, F. That's almost like a textbook thing of something you'd like to see, but you never really see. And here we've got it. I'm very comfortable calling this peak C in the Dow, the Qs, and the S&P, and the 122 level on the Qs will be key. On the S&P, SPX.X, that'll be 2,258 is going to be important support. And on the Dow, I think it is at 19,733. Yes. Okay, so that's going to be very important.
On your Qs, Basil, if we did top out here, the Qs would be labeled the same way that I'm thinking that the Dow would be, because you didn't do a trough A, B, C, D down. You just did an A. So it's possible that could have been a recycle, but a deep pullback on just one of the waves going up. In which case, then you get a wave D on your QQQs.
Yeah.
I'm just saying it's possible. We'll know in time. I mean, if this is the top and we go down, say, the rest of the year, then yes, there has to be a D.
Oh, absolutely. Then it's going to be a failure, one of the most unusual failures at all-time highs, and a C in a weekly. Gee, that happens very rarely. It can happen, but I'm happy. Anyway, I'm comfortable with calling this C right now. We will see in the fullness of time, okay?
Absolutely, Basil. A pleasure talking to you.
Thank you, Gator. Good question, though. I'll be back.
Talk to you later.
Dow's down 139, S&P's down 10. Basil Chapman, Tiger Technicians Hour. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So we're looking at GGP. A question about that was, what was the question? GGP. Come on. I don't remember what the question was. Oh, there it is. What about it? What is the question itself? The question was, Chapman wave count. Chapman wave count says that in the monthly chart, it's gone. This is general. Oh, just as well I moved it back. You always have to move the chart back far enough to see that you started at the right low bar. The most obvious low bar is right there, and it goes peak A, B, C, D, E. Starts again. It goes A, B. So let's see up C, D, E. Double top. So it makes a cup formation, Chapman wave drop bucket formation. Drop bucket formation is chapter, let's see, my CD introducing the Chapman wave methodology, chapter 22, slide 366. That's where it starts. So yeah, my monthly chart says you got to be careful. The weekly chart says if it breaks the low of 2363 GGP, trading at 24.91 up 95 cents, if it breaks that low and closes below that low on a weekly basis, that's a big negative. Right now, it's right at the point where maybe it's become a stock that in this particular environment might be seeing some action. So nice move up today, leg A. The other ones have failed. Okay, what would I do? Is it just the Chapman wave methodology? This is brand new A. The other, look, let me show you. Lowest, most obvious low bar. I'm going to put an up arrow just to say that's where we start. Look, A minus because it failed. It goes again, and it goes A minus. It goes again, and it goes, if you take that as the low, then that's an A and that's a B. I've begun to do that, so I'm going to include this as I put the A minus, keep it there, and just say there's a B minus. Now you've got another one, and very often they repeat the same thing over and over. This does go to a C minus, then it goes to an A minus, then it goes to another A minus. Why is it a minus? Because it keeps breaking down to a lower low. Now it's a gray A. So yes, I think that this fifth or sixth time, maybe this is it. In this particular environment, the Dow's down 151, S&P's down almost 11, Dow's down more than the S&P on a percentage basis. However, if this is showing some strength here and it gapped up and is holding, I would do this. If you want to have any long positions at this particular point, this can rally back to the 26 to the 26 and a half area. Not a bad percentage gain in a market that's pulling back. So if you want, you can start a position here at 24.99. Small position. It's really not the big thing. I would have to wait all the way until it breaks into the 25.50s and then pulls back. And that's when I'd consider, yeah, maybe this is the time that it's going to work. So would I go long? I'm hesitantly saying I'd start a very, very small position just to get a feeler. Why? Because if tomorrow is another double-digit, or if it's just a lousy day tomorrow, and this thing goes up and it hits the 25s, that'll be a good sign. That's saying, hey, I've made my base. I have higher technicals in the weekly than it was when I made my last low. I'm just going to say, this is the place where you could start a position. Hey, now it's at 25.03. Didn't it just move up while we were talking? Wasn't it 24 something? All right, but 24.503, I'd start a position. Considering that it's only a starter position, I need more evidence that it's going to make the H that breaks out. And the only way it breaks out is it closes above 26.84. Not a big deal, 1 3/4 points from here, but under these conditions in the market, this is a market that is going to make lower highs and lower lows as far as I can tell from the action. Now, let's just go through to a couple of things I was asked about. So what about the GGP? I just did that. CBL, is that the same sort of thing? Wave count? I haven't done, it's the same thing. So CBL is CBL and Associates property. So the property area that we're looking at right at this moment is showing us a little bit at 10.64 CBL. Thank you for that. I'm going to write down CBL. I can't even remember what the other one was. It was a GGP, I think. GGP. This is just saying this is perhaps the start of a move. And if you want, you could 1064 nibble, same thing here. Realize the market is vulnerable. This is vulnerable in the monthly chart, but not if at 1063 in 2 weeks' time, if this is trading at 1150, very good action. So now it's at 1064. As we're speaking, it just got popped. Okay, I like it as just a counter trend position. Don't get carried away. Question now that has been asked of me for about a week. Is the S&P making the kind of top that we saw? Okay, GTR, SPX February 17 action to mirror September 16 decline after January the 17th, similar to August 16th. I cannot do the mirror image right now other than to say I believe it's now a G, it's not a C in the daily. I'm making some kind of a short-term top. I'm going to suggest to you that if the S&P within 1 week takes out the 2250 area, then obviously you've got to be looking at the low of December the 30th at 2233.62 as a potential. All right? Meantime, this rectangle here, not this rectangle, but this rectangle right here is going to be very important. And that makes that low, as I say, 2254.25, the low of January the 12th. That's the low you've got to be watching on a shorter term basis. Resistance is now 22.79 in the S&P. High-grade copper, I was asked about high-grade copper. High-grade copper is acting very well. I got such contradictory indicators going on at this particular point. Copper is acting well at 2.71. It's walking the 9-period exponential moving average. Is going to, and the 200-period moving average in the weekly is trying to take that and make that support rather than resistance. I like it. It's very interesting that copper is acting well. The market right now is acting very, very poorly. So nice move, 2.67 to 2.65, key support in copper. Next question was, so my answer is, the way I'm looking at it, the weekly chart suggests that there could be a pullback in the S&P and the Dow, in the indexes themselves. At this stage, I have to just say that there is the levels of support, as I say, Dow 19,650, you take that out, and I have to be looking at the 19,470. I think it's 19,270 area. That would be major support on any pullback. All right, let's go to next question is UPS. UPS, I think earnings out, and UPS is not acting well. No, it's acting very poorly because it's down 724, down 6%. Look at this. It had a Chapman wave 2-bar reversal back on the 12th of December. 120.44 and then 120.43. Always a heads up at a peak F, EOF. You have that kind of a top with the technicals turning down. That's a bad sign. This is in a sell mode in both the daily and the weekly. The monthly chart hasn't yet even given a sell signal. I've still got it as a leg C. I'm not going to change that. I could make it a G/C. I don't want to do anything about it right now. So that takes us to FTX. Remember, I was saying FTX got to be kind of careful. Whoa, gap down as well, down 5 at 188.23, down 2.60%. Not good. That's a peak. It's almost like a single leg A up failure pattern. So this is the transportation index is telling us to be very careful. Peak E, double top in that, 171.50. I'll be right.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So I was asked about Tesla, TSLA, trading at $254.63, up $4 right now. It's funny, I drive by the Tesla place every week on my way to tennis. They have white, black, and red. Those are the colors. I think that the style, I happen to be in a Saab, one of the latest Saabs before they folded as a company. And I have to tell you that Saab, to me, that styling was just so much nicer than the Tesla. I've always had a problem with the Tesla styling for a car as contemporary as it is. I think it should have been way more, this is my own personal opinion. I've not driven in them. People who drive in them love them, just love them. There's no question about them. So it's got nothing to do with anything else other than question about Tesla here. And it just reminded me that I drive by the Tesla and they have these 3 colors. And I don't like at all, except maybe in white, it's a little bit better, the wagon or whatever they call it, the crossover. But it's a fantastic vehicle. I've sat in them many times, just haven't driven it. And it's amazing. It's a cult car for sure. So now we've got Tesla at a peak F. Now, I got a question here. Can you provide your analysis on Tesla today? Daily appears to be weakening. Looks like a peak E was reached on 125. Actually, that's a peak F if used as Chapman wave instant restart. Otherwise, you could get a DD. I mean, E's fine. I used the instant restart because the MACD had that particular pattern, and that was very important. Daily appears to be weakening. Looks like a peak E was reached on 125. Stochastic weak. MACD close to negative crossover to usher in sell signal. Weekly looks like only peak B. Yeah, it's only peak B, but it's underneath the previous peak. And I'm going to mention something here. It has to do with Larry's 20-man line. I believe that that's Larry's 20-man line. You see this monthly chart? You see the exact cycles that it's got going to its peak 291.42 was the all-time high back in September of 2014. Pulls back and then runs all the way, but it just fails at 286.65 in July 2015. Pulls way back to the 141 area in February of 2016, and then it runs huge. It runs up where? To the trend line, to a 269.34, lower high, in the same kind of time. And then what does it do? It goes from that level down to a more modest 178.19 low of the week, in November of 2016, has a spectacular 2-month run, just like it did before. And where does it stop? Right on the trend line in exactly the same time. Isn't that the 20-man rule that Andy talks about? Anyway, I think it is. So The MACD is just about to turn up, but it hasn't turned up. Stochastic's still only at 49. Let's go to 50%. With a move like this, it should be much higher. Weekly chart, yes, the weekly chart is, in fact, I'm about to sneeze. I'm not about... Excuse me, it's at the same time every day. Very interesting. What can I say? But it's a peak B, a leg B, underneath the previous peak A, and that's a gray. I got to call that a gray A. Right there. Gray meaning it's underneath, it can fail because it's underneath the previous peak C minus right there. And now it's got to a gray B, which is underneath that previous high. It could fail, but the MACD and stochastic and the weekly chart are still very good. So let's go to the daily. And the daily is holding very well. Now the question is, so let me finish the thing. Monthly looks like it is strengthening. With a nearly 42% gain since 11/14/2016 low, thinking about locking in profits. Thanks. Excuse me. You're asking me for my opinion? Manjeet, I'm going to ask you for your opinion. You're the one that had the spectacular move. All I can say is this. If you're starting to get nervous, if you've got the question, why don't you do this? Because it's the general market's acting horribly. And this is acting beautifully, holding the 9-period moving average. Why don't you do one of two things? Take at least half your position and put a stop in at 249, just 5 points low. Let's make it 248, under the 9-period moving average, and that'll take you out. But have a trading stop of maybe 3 points. It's up 359. So have a trading stop of 3 points. And if whatever it does, if it goes up a point, move it up a point. All right? That's the way I would do it right now. Or immediately, as we're speaking right now, just take off at 254.33, take off a good part of the position and keep the rest. Why? And I'll tell you why. Because if it breaks out and goes to the next higher peak, that will be peak G/C. If it's a C, the MACD could deflect higher. Stochastic still only at 82% instead of going to 77%. That'll be good. And you could get about those 5 points that you would give up if I said to you, have a stop below the low of the day. Why give up those 5 points? Rather take some off now and wait and see what happens. And then the rest can have a stop below. And then what have you done? You've taken a 50% gain difference between taking some off now and leaving it on, or just waiting for the whole position to go under today's low. And if you do, whatever you take off, have a trading stop, because if it takes out 258.46, then that's good. It's not great, but it's good. But what's really important is it starts to change both the weekly and the monthly chart, because you don't get that 20-minute line because it's going higher. And if it takes out the high of 269.34, that's really good action. I got a feeling you're right, Manjeet, by saying that it looks a little high, and that's why I'm saying, why don't you be the one to do it's your trade. You've done fantastically. I don't want to spoil your trade. I'm just suggesting that because you're a little bit nervous, give yourself a percentage of your nervousness. If your percentage nervousness says that I'm 70% sure that we're going to go down from here, I don't want to give up those gains, then take off 70%. If it's only 50%, take off 50% of that nervousness. But I would definitely say this is great action for the day. I don't know when the earnings are coming out, so check that out. You don't want earnings, you're already messed up with earnings. But if earnings aren't coming out for a while, keep it there. If it takes out 258.46, that's really good action. And then if it goes above, well, that's very high, 269.34. Let's do one thing at a time, okay? That's what I'm saying. If you're nervous, take something off. Give yourself a comfort factor. But I would not take the whole thing off here. I'd rather take a chance that I'm taking half off. And if it drops below the low of today, then I've really given myself an extra 2 points that I wouldn't have had. That's all. All right? Hope that helps you. And first of all, I must say congratulations. You did exactly right. You bought it. You held it. It's gone straight up, and that's fantastic. Straight up doesn't mean to say straight down. not if it holds sideways. And I'm going to draw in an oval. No, I can only draw a rectangle. A rectangle slightly higher, slightly lower, and I'm just saying 242-ish to 261. That's kind of the range right now if it's going to stick to this pattern. Hope that helps you, and we'll be back. Dow's down 156. Let me show you this chart right here. There it is. Oh, it went to a leg D. Ooh, this is interesting.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So we made a peak D and a peak E in this 10-minute chart. The left side, right side price time match from the 22.63.25. I forgot to type it in. 22.63.25 low of 11 o'clock yesterday has come all the way back, and at 11:40 it went to 22.62.25. Now this is the bar. Remember, in the Chapman wave rule of the arch formation, the bar that takes out the left side low or the very next bar has to close above it, which it did, and then move towards the next level of resistance, which could be a moving average or a peak. Well, the moving average is at 22.65.25, 50, and is almost there now. If it takes that out, the next level will be 22.67 and then 22.68, the little peak that was made at 11:20. Now, what's really important about this is the opportunity for a counter trend bounce like we saw yesterday. Bear markets they close at the low of the day, double digit down the futures, and then open double-digit down, and then have an intraday rally before going to lower lows and lower highs. We haven't really seen that, and the volatility index is screaming up at the 1287 level. This makes it really important. I'm going to have an update for my subscribers by 12:30, 12:15, 12:30, and I'll make some decisions here. But this is a really important phase. I was asked about Microsoft. Good question, because Microsoft is going to leg C in the monthly. The month's about to finish. Probably a peak D in the month in the weekly chart, and the week has still got all the way to Friday to go. Needs 65.92 to break out to extend leg D. I'm sorry, not to break out, just to extend leg D. But to break out above, to go to a D, that would be the daily. The daily really looks like the other indices, that this is really a G, an extension of that peak F, even though we pull back deeply in the MACD and stochastic, not so much in the price. So the question is, John wanted to buy calls, February calls, for 65. I'm going to make two suggestions. One is, John, I would only buy the calls if I can get the 65 February calls below 30 cents. And even then, I'm going to be thinking about it. I'd prefer you to go to March for the calls. I think it's going to be a little tricky. So, yeah, I would say have patience. I'll do it again tomorrow. I don't see yet for you. I don't see any reason yet to go in. And Rob asked about coffee. JO, what was the question? If you have time, curious your thoughts on coffee, ETN, ticker JO. Thank you. Love the show as always, Rob. So, Rob, we've made a peak D in the coffee. We didn't make the left side, right side price time match. That's a failure pattern. So it's kind of like an arch formation at 2098. I think it's going to come down. The MACD hasn't crossed negative. If it does, I would not be surprised if it goes down to the 20.98 right now. 20.05 to 19.75 would be my downside target at this particular point for that's coffee. So only thing that could change it if tomorrow there's just a sudden spike into the 2160s, I'd have to say completely wrong. It's going to bounce and it's going to make a little the cup pattern after making a potential H. That's where I'd be wrong. But at this point, I do think from the pattern I'm looking at that it's going to go to the low 20, maybe the high 19s. So, folks, we're about to wrap up. Go to your swimming lesson. Today's Tuesday. Go to programming all day, all the way through. And, of course, you've got Andy Hecht later on at 5 to 6. Now, the Dow's down 156. Let me just do this one more time. The VIX index is suggesting now it's at the high of the day at 12.89. 12.99 is the high, so it's a little off the high. But it has gone to a higher high than yesterday. This is now serious, and the only thing could change it is if there is just a reflex action for suddenly something happens that takes the Dow down. Instead of 160, it's down at 3 o'clock, 10 past 3. If the Dow's only down 110, S&P's only down 7, and the VIX is falling back to 1235, that would say, okay, folks, we're going to get some upside action for the next 2 days. Otherwise, you've got to be really careful. I'm thinking really careful is the word right now. Have a great day. I'll see you tomorrow. I'll be doing the 10 o'clock show with Tommy again tomorrow because Tom's away. Have a great day. I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.